Good morning, ladies and gentlemen. My name is Russell Higgins and I'm the Chairman of Argo Investments Limited. On behalf of the Board of Directors, it's my pleasure to welcome you today to the 76th Annual General Meeting of the company, which will include a report on its operations and financial results for the year ended 30 June 2022. It's very pleasing to once again be able to meet in person here in Adelaide after a couple of years of interruptions caused by the COVID pandemic. It's pleasing to see the shareholders here in person, and to any visitors, welcome to you also. Before we begin the formalities, I'd like to inform you that today's meeting is being filmed and streamed live on the company's website for shareholders who are unable to attend. A recording of the meeting will also be available via our website later today. At this stage, can I please ask you to check that your mobile phones are turned to silent? Thank you. I have been informed by the Company Secretary that the meeting has been convened in accordance with the Corporations Act and the company's constitution. A quorum is present, and therefore I declare the meeting open. A disclaimer is displayed before you there now, and it's important to understand that the information presented today is general information only and is not a securities recommendation or statement of opinion intended to influence any person in making an investment decision. You should consider seeking independent professional advice before making any investment decision. I'm pleased to ask my fellow non-executive directors and our Managing Director and Company Secretary to introduce themselves here this morning.
Good morning. My name is Anne Brennan. I was appointed to the board in 2011 and I chair the Audit and Risk Committee. I will be retiring from the company at the conclusion of this meeting after 11 years on the board.
Good morning. My name is Leanne Buck. I was appointed to the board in July and I'm a member of the Audit and Risk Committee. I'm standing for election today, so you'll hear from me again later in the meeting.
My name is Chris Cuff. I was appointed to the board in 2016. I'm also a member of the Audit and Risk Committee, and I'm also standing for re-election today, so you'll hear from me a little later.
Good morning. My name is Roger Davis. I joined the board in 2012 and I am chair of the Remuneration Committee.
Good morning. My name is Liz Lewin and I was appointed to the board in 2018 and I'm a member of the Remuneration Committee.
Good morning, everyone. My name's Jason Beddoe. I'm the Managing Director of Argo Investments. I've been with the company for over 20 years and equally I'll be giving my address shortly.
Good morning, my name's Tim Banks. I'm the Company Secretary. I've been with Argo bang on 15 years and I'm also the Chief Operating Officer.
Thank you. So now we'll move on to meeting procedures. All resolutions at this AGM will be decided by poll. As Chairman, I have called that poll. When registering your attendance today, you will have received either a green, pink or white admittance card. Shareholders or proxy holders representing shareholders were issued with a green admission card and are entitled to vote on the poll and ask questions at the meeting. On the reverse side of your green admission card is your voting paper and instructions. Only those shareholders with a green card have received a voting paper. This can be marked at the time we consider each resolution or at any other stage during the meeting. After the meeting, you can place your completed voting cards in one of the ballot boxes located at the exit doors. The results of the poll will be released by announcement to the ASX later today. The holders of pink cards are non-voting shareholders, such as a joint shareholder where the other joint holder holds the green voting card. The holders of pink cards do not vote on the poll but are entitled to ask questions at the meeting. All visitors were issued with white cards and are not entitled to vote or ask questions at the meeting, but you are very welcome. I report that the minutes of last year's annual general meeting were confirmed as a correct record at the subsequent meeting of directors. The notice of meeting for today's AGM has been circulated to shareholders, and I propose to take it as read. We now move on to other items of business. The first one is the consideration of the annual financial statements and reports. The audited financial statements of the company and reports of directors and the auditor for the year ended 30 June 2022 have been published and made available to shareholders. In the course of receiving and considering the financial reports, I'll now make some general comments about the year under review. This will be followed by an address by our Managing Director, Jason Beddow. During a period of significant share market volatility and challenging economic conditions, Argo's conservative investment philosophy and straightforward business model has again delivered a positive outcome for our shareholders. Argo's profit for the 2022 financial year rose by 79.9% to a record $312.9 million. The significant increase was driven by record dividend income received from companies in the portfolio, with many paying special dividends and considerably higher dividends, including BHP and Rio Tinto. Our profit was bolstered by one-off non-cash items due to the merger of BHP's oil and gas business with Woodside Energy and Tabcorp's demerger of the Lottery Corporation. In August, the board was pleased to declare a final dividend of 17 cents per share, fully franked. Together with the interim dividend of 16 cents per share, shareholders received annual dividends of 33 cents per share, fully franked, which represents an 18% increase on last year. Argo has now paid dividends to our shareholders for 76 consecutive years. Importantly, the annual dividend for the 2022 financial year is equal to the dividend paid in the 2019 financial year, before economies and share markets globally were impacted by the COVID pandemic. The final dividend also includes a record listed investment company or LIC capital gain component of 15 cents per share. This was a result of substantial capital gains being crystallised in the portfolio, most notably due to the takeover of Sydney Airport, which was one of our larger holdings. When Argo makes a capital gain on the sale of a long-term holding in the portfolio, a capital gains tax benefit can be passed on to our shareholders as if they made the investment themselves. Most individual and self-managed superannuation fund shareholders can claim a tax deduction in relation to this gain, in addition to the benefit of franking credits. Argo is one of only a few companies able to provide this benefit to shareholders due to our status as a genuine long-term investor, not a trader. This is a key benefit of Argo and distinguishes us from managed investment funds and many other LICs. You can find more details on your dividend statement or refer to the dividends section of the Shareholder Centre on our website. Now turn to our investment performance. During a period of significant volatility, driven largely by macroeconomic headwinds, Argo's portfolio of quality Australian listed companies proved resilient over the 2022 financial year. We received record dividend income and outperformed the Australian share market by 4.2%. Our investment performance, as measured by net tangible assets, or NTA, after management costs, was a negative 2.3% as compared to the S&P/ASX 200 accumulation index return of negative 6.5%. This strong relative performance reflects Argo's conservative investment philosophy and consistent focus on company fundamentals, including profitability. Our disciplined approach ensured we avoided companies and sectors with inflated valuations, including many expensive technology stocks and speculative mining companies. Our Managing Director, Jason Beddoe, will discuss the portfolio in more detail shortly. For the 12 months to 30 June 2022, Argo's total shareholder return, that is, the share price performance plus dividends, was plus 1.6%, an impressive 8.1% of the Australian share market. Including the benefit of franking credits, the return was even larger at plus 3%. Argo Investments has a number of long-serving non-executive directors. As a consequence, we've developed a succession plan for the board of directors, designed to refresh the board whilst maintaining an appropriate mix of skills, experience and diversity. The retirements and new appointments will be staggered over time to ensure our long-serving non-executive directors are not all retiring simultaneously. On 30 June 2022, Mrs. Joycelyn Morton retired from the board after 10 years of service, including as a member of our Audit and Risk Committee. We're pleased that Joycelyn is here with us today. Joycelyn's strong financial acumen, hard work and team-first approach was of great value to the board. She played an instrumental role when Argo established a new listed investment company, Argo Global Listed Infrastructure. She became a founding director of that company in 2015 and continues to serve on the board. Also, as announced last month, Ms. Anne Brennan retires from the company at the conclusion of today's meeting, after serving on the board for 11 years, including as chair of the Audit and Risk Committee. Anne has used her experience both in professional services and a variety of major corporations to make a significant contribution to the company during her time on the board. In addition, as chair of the Audit and Risk Committee, her diligence and rigour around financial reporting has been greatly appreciated. On behalf of the board, I'd like to take this opportunity to formally thank Joycelyn and Anne for their tireless dedication and valuable contributions to Argo Investments. Following an external search process, Ms. Leanne Buck was appointed as an independent non-executive director with effect from 1 July 2022. I'm pleased to introduce Leanne to the shareholders today. She's an experienced company director with relevant industry experience and more than 20 years in Australian and global investment markets. We'll hear from Leanne later today. I now turn to environmental, social and governance issues. Consideration of environmental, social and corporate governance, or ESG factors, has never been more important when investing and has been getting a lot of attention lately. Over many decades of investing, Argo appreciates that a business's long-term financial sustainability is dependent on how ESG opportunities and risks are managed. Therefore, an assessment of these factors forms an inherent part of Argo's investment approach. Our analysis focuses on identifying potential liabilities and opportunities that can fundamentally influence a company's long-term value and return to shareholders. For interested shareholders, further details about Argo's ESG integration, including our recently updated ESG investment statement, can be found on our website in the How We Invest section. From time to time, we're also asked about Argo's own ESG credentials. As a listed company, we take these matters seriously. We meet all the governance standards required and have instituted policies regarding diversity and inclusion. It's worth noting that Argo's environmental footprint is minimal. Our operations consist of only 2 small offices with just 13 full-time equivalent staff. We recycle where possible and minimise printing and travel. I now want to make a few remarks about the outlook. When I addressed last year's AGM, investment conditions were relatively benign, notwithstanding some ongoing COVID-related economic challenges and restrictions. Investors were generally optimistic. Massive stimulus measures remained in place and interest rates were at historical lows. At the time, I observed that unwinding the extraordinary fiscal and monetary stimulus would pose a challenge and that the pathway out represented a risk to the outlook and could be a source of some volatility. In the intervening period, governments began withdrawing stimulus and central banks commenced aggressively raising interest rates in an effort to combat surging inflation. These challenges have been compounded by Russia's invasion of Ukraine, which has driven up energy prices and further hampered supply chains, still recovering from COVID disruptions. In addition, China's COVID-0 policy, encompassing lockdowns, is having a significant negative impact on the Chinese economy. In general, markets are reacting negatively to these factors. The outlook remains heavily contingent on the ability of governments and central banks to carefully manage policy settings, walking a fine line so as not to fuel inflation nor lead their economies into recession. The geopolitical factors previously mentioned also contribute and continue to impact on the economic outlook. In my view, there are more risks than normal in the outlook for major economies in the year ahead. In these uncertain times, I want to reassure shareholders that we will continue to apply Argo's business model to the best of our ability. Argo has weathered numerous disruptive events and navigated through different market cycles for more than 75 years. Argo's business model remains resilient, with a strong balance sheet, no debt, and a diversified portfolio of blue-chip companies. We remain focused on fundamentals and consistently applying our investment approach when investing our shareholders' capital. I'd like to conclude by thanking our Managing Director, Jason Beddow, and the dedicated Argo team for their continuing hard work during what has been a really trying time. I'd also like to thank my fellow board members for their valuable contributions to the company over the last 12 months. And importantly, on behalf of the board, I sincerely thank you, our loyal shareholders, and to our new shareholders, welcome to Argo. I now call upon Jason to provide his Managing Director's address. Thank you.
Good morning again, everyone. It is nice to be back in person after such a long time, and can I just thank you all for coming after, that sort of time when we were planning the AGM. We were very uncertain as to how many people may or may not turn up. And that's before I apologise for bringing the Sydney weather with us, so thank you. Indeed, it feels like a very long time since the beginning of 2020, when the COVID-19 virus was just beginning to spread across the world. The global pandemic generated some of the most extraordinary and unprecedented events experienced in modern history. Over the course of the health crisis, central banks and governments worldwide provided vast financial support on an unprecedented scale to preserve economies, businesses and employment. And these efforts were largely very successful. An unintended, although for many not unexpected consequence, was the strong increase in liquidity and asset prices globally, including equities. The resulting inflation, some a direct result of COVID, like increased supply chain costs, was considered transitory. Even up until late last year, it was still not a major concern for most economists or central banks. The 2022 calendar year was to bring its own economic and geopolitical shocks with the Russian invasion of Ukraine. The war has caused huge disruption to energy markets globally, fueling the already inflationary environment, not to mention the terrible human toll. So we fast forward to today, and it's hard to avoid reading about inflation, interest rate increases, and the rise in the cost of living. Earlier this year, global inflation surged to almost 10%, catching policymakers and investors by surprise. The rhetoric has quickly changed from insisting that inflation was a post-pandemic effect, which would normalise, to a much bigger, more persistent problem. We are no longer living in a 2% year-on-year inflation world as we did for many years. This calendar year, 33 of the 38 central banks monitored by the Bank for International Settlements have raised interest rates. The US Federal Reserve has raised rates more quickly than at any time since the 1980s. Australia has also followed suit with 6 consecutive monthly rate increases, totalling 2.5%. The official cash rate is now 2.6%, with further increases likely still to come. Currently, markets are extremely sensitive to macroeconomic and short-term factors with significant daily noise. That said, there is a lot of noise to be concerned about. The Russia-Ukraine war, the energy cost crisis, rising inflation and increasing interest rates, China's weakening economy, and the hangover effects still being felt of COVID. In Australia, a third year of the La Niña weather system and the associated increased rainfall, particularly on the east coast of the country, is also generating major challenges and disruptions. This uncertainty is adding to the increasing fear that if inflation remains elevated, the prospect of a higher for longer interest rate environment increases, and the likelihood of a soft landing for the global economy decreases. In this scenario, central banks will have to go harder to slow demand, creating further headwinds for equities. A side effect of the rapid increase in rates and the variable economic growth outlook around the world is the unbridled strength of the US dollar. While the Australian dollar has held up well against many currencies, it is at a 15-year low versus the greenback. And while this is generally a positive for Australia's competitiveness, it does add to inflation through the rising cost of imported goods. So the share market is again characterised by a lot of volatility with sharp daily movements. And despite some aggressive rallies, shares overall have trended down for the past 6 months. Overall share market returns have been dragged into negative territory for the 12 months to 30 September 2022, with the S&P ASX 200 accumulation index down 7.7%. Within this, a few sectors have delivered positive returns over the period, namely energy, utilities and materials. In contrast, information technology, consumer discretionary and real estate stocks are down over 20%. Within the resources sector itself, there have also been extreme moves in some commodity prices. The price of spodumene, which is a base oil for lithium production, has increased over 500% in 12 months, as global automakers and battery manufacturers fight to lock in limited supply at almost any cost. Thermal coal prices have doubled because of the energy crisis in Europe and the bans on Russian coal exports. However, iron ore and copper prices have fallen around 20%, as fears of a global slowdown and China's economy remains weak. Everything considered, Australia's economic data is holding up, with almost record low unemployment, solid household spending and expansionary readings on several key economic indicators. However, stubborn inflation, interest rate hikes, geopolitical instability and softening housing markets are some of the key risks to the global and domestic economy. In this uncertain environment, we've continued to focus on long-term income and capital growth. We diversify our portfolio in an effort to maintain balanced performance over longer timeframes and deliver shareholders a relatively smooth dividend profile through market cycles. Our priority is on well-established companies that ideally have a competitive advantage with opportunities to grow. We also believe strong management teams will be increasingly important in these more difficult times. Quality companies will likely perform better regardless of the macroeconomic conditions and policy settings. We are more likely to be adding to existing holdings that we know well during periods of market weakness rather than adding new names to the portfolio. We've made minimal purchases so far this financial year. We have sold our holding in Tassal Group, a long-term holding, following the revised takeover bid from Canadian company Cook at what we thought was an attractive price, and exited a number of smaller holdings. So the overall number of holdings is reduced marginally by 3 to 90. While not significant, we have been building up our cash balance since year-end to deploy as opportunities better present themselves. We do believe that some market trends are now entrenched, regardless of disruptions to economies or the economic cycle. From an energy perspective, the growing shortages and increasing prices have refocused global attention on the importance of energy security. The issue of energy security now sits alongside the need for decarbonisation and affordability. Sustainable energy and electric vehicles are two trends that fall into the decarbonisation category. The commodities that underpin these themes will likely remain in demand well into the future. Two stocks in the portfolio that provide exposure to this trend are IGO Group and Lynas Rare Earths Limited. Lithium remains one of the key components in batteries for electric vehicles. IGO is one of the biggest lithium producers in Australia and provides high-quality exposure to the rapidly growing battery materials market with low-cost lithium and nickel operations. The company has exposure to the Greenbushes lithium mine in Western Australia via a 25% ownership stake. The mine has the largest installed capacity, the highest reserve grade, the lowest cost structure and a mine life of over 20 years. IGO is generating very strong cash flow from existing operations and can use this to fund future growth opportunities. The demand for rare earths is also underpinned by growth in electric vehicles, wind turbines and the development of many new technologies. Lynas owns the Mount Weld open pit mine in Western Australia, which is one of the highest grade and largest scale deposits in the world. It is the largest producer outside of China of high-value rare earth elements, including NdPr, which is used in the production of magnets for electric vehicles and wind turbines. Lynas has started construction of an additional cracking and leaching plant in Kalgoorlie, with completion targeted in 2023, and is also in advanced studies for the construction of a US rare earth facility in Texas. There are a number of challenges facing the global economy. In the United States, there is a surging inflation problem. In China, the issue is slowing growth. Europe seems to have the worst of both worlds, with rising prices and a looming recession, not to mention energy shortages. Much of the rest of the world is dealing with supply shortages and weak currencies against the US dollar. In comparison to most other countries, Australia is faring relatively well. However, as we enter 2023, interest rate rises will likely have a slowing impact on the economy, and we may experience shockwaves from any number of global developments. We believe corporate Australia is in relatively good health and will be able to absorb a lot of this uncertainty. Company balance sheets are strong and unemployment remains low. We continue to take a consistent and conservative approach to managing Argo's portfolio, remaining faithful to what has proven resilient through difficult economic cycles and disruptive events over many decades. With no debt and cash available, we believe Argo is relatively well positioned in the current environment. I'd also like to acknowledge the efforts of the whole team again this year. Our staff continue to work tirelessly for the company, and it may surprise you, still number just 15 across both our Adelaide and Sydney offices, and actually 2/3 of them are here today, so helping out. So thanks everyone. Also like to acknowledge the contribution from the chairman and non-executive directors, and I look forward to working with them as we best navigate Argo through this next period for you, our shareholders. I'd also like to thank Joycelyn and Anne for their time on the board and their contribution to the company, the support and guidance they've provided me and other members of the team in their time on the board, and wish them well in their future endeavours. And as I said at the beginning, I'd like to wish all the shareholders well for the coming months and through into the new year. We thank you for your continued support, appreciate you coming today, and I look forward to meeting more of you in person throughout 2023. So thank you.
Thanks very much, Jason. Julian McCarthy, the signing partner from our external auditor, PricewaterhouseCoopers, is here today and is able to answer any questions relevant to the conduct of the audit and the preparation and content of the auditor's report for the year ended 30 June 2022. Shortly I'll address any shareholder questions on the financial reports and any general matters, bearing in mind that we'll separately consider the remuneration report and other items of AGM business later in the meeting, and at which time we'll be able to ask questions in relation to those items. We have received some questions in advance of the meeting, and I will answer those at the appropriate time also. Just a reminder, to ask a question you need to have a green or pink card, and can you please make your way to one of the microphones you can see they're in the aisles towards the front so that we can hear you. I'd like you to state your name and any affiliation you have, and also ask you to limit yourself to one question only in consideration of the other shareholders. So, are there any questions concerning the company's financial reports at this time? Yes.
My name is Greg O'Connell, and I represent approximately 4 million proxy shares on behalf of the Australian Shareholders Association. Thank you for meeting with us and discussing issues of interest to us earlier this month. It is pleasing to note that Argo has outperformed the Standard & Poor's ASX 200 Accumulation Index this financial year, following outperformance last financial year. We hope this is a trend that may continue. We will be voting against the remuneration report. Noting Argo's own self-imposed limit of 9 years tenure for directors and the retirement of 2 of the 4 longest-serving directors, we will have questions regarding director skills and workloads when it comes to voting for director re-election and election. We will ask questions as each of those resolutions are presented. Thank you.
Thank you very much. Are there any other questions or comments at this time? While you're thinking whether you want to ask, I have received a few in advance. I have a question here from Chalcott Nominees, who asks, 15 years ago I bought Argo shares at $8 and now they're worth $8.80. A gain of just 10% is not good enough, especially when other LICs pay their directors for less for better performance. Well, I'm pleased to be able to inform Chalcott Nominees that the 10% is not the return you've had on your Argo shares in that time. What you've forgotten about is the dividends that we've paid during those 15 years, and so your return over that time is 99.4%, just on 100%, and that takes no account of the franking credits and LIC capital gains benefit that you've had as well. I compare that to the change in the S&P ASX 200 accumulation index over that 15 years of just 88%. So I think if you look at the full picture, that has been quite a performance. The remuneration, of course, is decided by every company, and a remuneration report is put to shareholders for vote each year. Any questions from the floor? I have a couple of others here I can keep going with if you would like. I have another question from Chalcott Nominees. Why didn't Ms Buck buy Argo shares prior to her appointment to the board so that she had a holding in the annual report? Well, a couple of comments I'd make about that. One is that holding Argo shares is not one of the criteria we look for when we are searching for new directors. We base that on skills and experience, and Leanne meets those extremely well. She'll speak to the meeting later at the appropriate time. She was appointed on 1 July this year, and from 1 July to the release of our financial results in mid-August is a blackout period for trading in Argo shares by directors and the management personnel. So that's also a bit of a challenge, I think, for Leanne. The policy states that directors should hold Argo shares equivalent to 1 year's remuneration and they're to be built up after 3 years. I'm pleased to tell the meeting, as has already been announced to the ASX, that in the meantime Leanne's bought 10,000 Argo shares as well, so I think that fairly answers that question. I'm looking for questions from the floor. I'll keep going here if you like. Debbie Ambrusco asks, why is your share registry wasting money by sending AGM documents priority post when shareholders have 28 days to lodge a vote? Well, we do send things out by, well, the share registry sends things out by Australia Post. As I'm sure you'll all know that the post is a little less reliable these days. I should say that I recognise Australia Post has a very difficult job with the volume of mail declining and their costs really are relatively fixed. So a difficult job, but if it's anything like happens at my place, there's rather less frequent and irregular deliveries of the post, and so we think it's better that we ensure that people get their documentation. The priority post is supposed to ensure delivery within 4 days in metropolitan areas and a bit longer in rural areas. Yes, gentleman over here, thank you.
Stuart Brew, I was a shareholder in Argo. I've got several questions actually, but I'm only allowed to ask one. I think the first one I'll start with is I don't really understand why Argo invests in other LICs. It would seem to me that with the expertise we've got in Argo, we don't need to rely on other companies to invest the money.
Indeed. Thank you for that question. Some time ago, Argo and other LICs used to see that when quality LICs were trading at a significant discount to net tangible asset backing per share, that it was a good investment opportunity. The ability to buy $1 worth of quality shares at 90 cents or even less seemed to be a good investment, and that was the way things happened. Since that time at Argo, we've made a policy decision, and just exactly as you suggested, that we regard the expertise of our team to be what we want to back, and so we've ceased adding to holdings of LICs, and in fact have been selling down. I think that we still hold a reasonable holding in Australian United Investment, which we're selling down, but there's very low liquidity in that stock, so it'll take some time. Milton was another holding, but that got taken out by Soul Patts, so that's gone from the portfolio. So to answer your question, we are reducing the holdings because probably about a decade ago we changed the policy that we were not going to invest in other LICs and take down. The one exception to that is, of course, Argo Global Listed Infrastructure, which we floated 7 years ago, and Argo Investments took a holding of $25 million in that IPO as a way of showing support for the IPO, which was something we were launching and carrying the Argo name. And we continue to hold that $25 million worth of stock. We regard it as a very good diversification investment for Argo shareholders. Any other questions? Yes.
My name's Colin Pilcher. I'm a shareholder, a long-standing one. Just before I get on to my question, I haven't got a problem with Argo holding other LICs. I mean, different companies concentrate on different areas, and it gives you a broader outlook on the market. And if something is a good investment, it's a good investment. I'll get on with my question now. At a recent briefing from Australian Foundation, they mentioned that they've got a holding just a little bit over 1% of direct overseas shares, and basically they were saying that if they grow this, they may end up doing it as an IPO. Has Argo got any aspirations of building up a little bit of an overseas contribution to their shareholding? And if so, what limits would they put on it?
Yes, thanks Colin, thanks for that question. The brief answer to your question is no, we don't intend to follow that path. What we did do here at Argo Investments 7 years ago was to float a new LIC, Argo Global Listed Infrastructure, which invests in listed infrastructure companies, so that's railways, pipelines, ports, airports, toll roads, electricity, utilities, etc., globally. And we think that's a great diversification opportunity for shareholders if they're looking for something of that nature. And we don't have any plans for anything else at this point in time, but just to make the contrast with AFIC, we already have a listed investment company that invests overseas, so it's there already. Yes, I can see another gentleman coming to the microphone.
Mr. Chairman, my name is Chris Maxworthy. I'm a member of the ASA, the Australian Shareholders Association, and my question is to both you and perhaps... There you go. My question is to yourself and the MD. And my particular question is, we spoke earlier about ESGs. bit better. Okay, ESG, environmental, social and governance. We spoke about what the company itself does, but I do wonder about our involvement with the companies that we invest in and how we present or might express our preferences for those companies. I note, for instance, that many of the companies we hold are not contentious in terms of their position in the community or involvement with petrochemicals, but we do have a holding in Santos. So my question is, are we a passive investor or are we one that looks to influence and perhaps reshape those companies in keeping with the general trend within society?
Okay.
And if I might, I'd like to lobby for the ASA as well, for those individual
I'm going to hold you
shareholders.
up there. You can lobby for them all you like,
Okay.
but
All
not
right.
during my AGM. Thank you.
Certainly. Well, thank you.
Thanks very much for the question, pertinent one. I'm going to add a couple of others that I've got here pre the meeting as well. David Bryce asked, does Argo place pressure on company boards to accelerate net zero carbon policies? And Beryl Croft asked, how will Argo contribute to the legislated target of 43% reduction in carbon dioxide emissions by 2030? So they're all on a similar theme about ESG, how we encompass it and how we engage with company boards. So I'm going to ask Jason if you wouldn't mind addressing that, please.
Thanks, Russell. Yeah, look, it's a very hot topic. EES and G, all quite different. I guess in the context of what will Argo do directly, I mean, I think the best thing we can do is, how we allocate our capital to our investee companies over the coming years. As the chairman pointed out, we're a very small company with a very small direct footprint. We engage with boards and have actively engaged with boards since my time at Argo. One thing about being a public company ourselves, we're aware of regulation, ASX, ASIC, anything that's coming through. So we probably have as good an understanding of these companies versus a lot of their shareholders. So we engage with boards on many issues, social and governance, and increasingly environmental. I guess our view on environmental is we are listening to the boards, listening to management, and listening to, I guess, the plausible plans that they have to reach these targets. Some are clear, some are very unclear. They're also not very clear in how they'll be funded or returns. So I think we're still in very much a learning game of what these companies will do directly. So we're not putting pressure on the boards themselves to accelerate decarbonisation or push. They will have to comply as a listed entity to regulation and governance. We want to be part of the journey with them. And if the company does have a plausible plan to be carbon neutral or whatever the targets may be, we will stay a shareholder, may well add and direct our capital appropriately.
Thanks, Jason. I have a couple of other questions which regard holdings in the portfolio, Jason, if you wouldn't mind. John Gifford asked, why does Argo still hold Star Entertainment Group after the Bell Report governance findings?
Yeah, look, a good question. I mean, the behaviour of both the casino operators or the large ones, Crown and Star, have been appalling, really. A full breakdown of management and directors, and subsequently, the Star board has completely changed and there's a new management team. So we certainly don't condone their activities or what they've done. The reason we still own it, though, is I guess the similar reason that Blackstone bid for Crown is that the Star assets, particularly Queensland, are unique. They have a monopoly. They have their licence. We took a view that the pathway that Crown had to go through with regulators and the government to keep their licence would play out with Star. So we think there's value in the assets at this level, even though we certainly do not condone the behaviour of the board and management.
Thanks, Jason. And the last one I have here comes from David Bryce, who asks, how close is Argo to adding Fortescue Mining to its portfolio?
Good question. Probably not close. I've actually got Andy in the audience who follows resources for us. But look, we've got good exposure to iron ore through BHP and Rio, and we like their broader suite of commodity products, particularly in the current environment with, I guess, China being a little weaker. Look, Fortescue is very interesting and has a very high-profile division now, the future-facing industries, which is all about decarbonisation, green hydrogen, green steel. And, you know, we spend a lot of time looking at some of these proposals on what that division is doing. But again, a lot of the things that division is doing is really concept stage, and, you know, we're not sure of the funding requirements needed or indeed the returns they'll generate. So it's on a watching brief, but I wouldn't say we're close.
Thank you. That completes the questions that have come in before the meeting. Are there any others from people here? If not, I thank you very much, and I'll now move on to the next item on the agenda. Item 2 on the agenda concerns the adoption of the remuneration report. The Corporations Act requires all listed companies to submit a remuneration report to their shareholders for consideration and adoption by way of a non-binding vote. Argo's remuneration report is detailed within the annual report and outlines the company's remuneration policy and its relationship with company performance. The key principles of Argo's remuneration strategy are to align remuneration structure with shareholders' interests, to attract, retain and reward talent, to link a significant component of remuneration with the creation of shareholder value through relative outperformance, and to ensure remuneration is competitive and fair. Ensuring that our remuneration structure is linked to value creation for shareholders is achieved by awarding the Managing Director and specified executives with a combination of fixed remuneration, short-term incentive or STI, and long-term incentive or LTI opportunities. Alignment of the long-term interests of shareholders and executives is achieved by a significant component of executives' pay being performance-based or at risk and measured over an extended period, and also by awarding some of the executive remuneration in the form of Argo shares rather than cash. All our employees are Argo shareholders. Performance is measured relative to Argo's listed investment company peer group and in comparison with the S&P ASX 200 share market index. Our remuneration policies are unchanged from the prior year. The Board considers the company's remuneration structure, was explained in detail in the remuneration report, is fair, competitive, aligns Argo's corporate objectives and the interests of shareholders, and genuinely rewards sustained good performance achieved without taking undue risks. I now move the motion that the remuneration report for the year ended 30 June 2022 be adopted. Can I ask any shareholders who wish to ask a question regarding the remuneration report specifically to please make their way to one of the microphones? For your information, details of the proxy votes received on this resolution appear on the screen. Please note that this resolution is advisory only and does not bind the directors of the company. However, should 25% or more of shareholders vote against the remuneration report for 2 years in a row, then shareholders at the second AGM will be asked to vote on whether all directors should stand for re-election. Are there any questions? Yes.
It's Greg O'Connell, officially representing the Australian Shareholders Association. We believe that the FY 2020 lowering of the maximum hurdle for long-term incentives from 3% to 1% amounts to a pay rise for executives at a time when the company has underperformed the Standard & Poor's ASX 200 accumulation index over the 5, 10 and 15-year periods. We understand this change supports staff retention. However, as we explained last year, we see no incentive for improved performance to the benefit of long-term shareholders. We voted against the remuneration report last year, and we plan to vote against the adoption of the remuneration report this year. I don't have a question.
Thank you. Are there any other questions, comments? I might just make a comment in response to Mr O'Connell. This is a change that happened 3 years ago. Shareholders have voted on the change twice already, and this will comprise the third time they've had a chance to vote on this. That long-term incentive is only paid when we match or outperform the ASX 200 index. In your statement you said we pay for underperformance. We do not. You must reach the hurdle of matching the index over 4 years or outperforming before any payment is made. And for your information, over the last 5 years, only 33% of the opportunity has been met because the hurdle hasn't been met. So we do not pay for underperformance as you continue to claim. Are there any other questions? I now put the resolution. I do have one other question that was sent in advance. It comes from Miles Harvey, who asks, why does Argo pay incentive bonuses when it seems most incentive bonuses are always awarded no matter what the company's performance? Well, that statement's not true either. Incentives are only paid when we outperform on a earnings per share basis, our peer companies, and on a net tangible asset basis, outperform the index. Over the last 5 years, of the maximum short-term incentive, only 60% was awarded and therefore 40% lapsed. And for the long-term incentive, 33% was awarded and 67% lapsed. So I think that's the factual situation there. Any other questions? I now put the resolution to the meeting. I remind you we are voting by poll. If applicable, please mark your green voting card for item number 2. Thank you. We'll now move to the next item of business. Item 3 on the agenda concerns the re-election of a director. Mr Chris Cuff retires by rotation in accordance with the company's constitution and, being eligible, offers himself for re-election today. The details of Chris's qualifications and experience are included in the notice of the meeting. The other directors unanimously recommend that shareholders vote in favour of Chris's re-election, as they consider he is well qualified to be a director of the company. I now invite Chris to address the meeting.
Well, good morning again. As Russell said, I'm up for re-election. I'm an experienced company director. My specialty field, I guess you'd call it, is investments. So I think I'm considered quite an expert in the investment field, having spent considerable amounts of time in the past with Colonial First State and the Challenger Group, and these days with a number of investment committees. I have served on this board since 2016, so I'm very familiar with Argo, which is good. I have the time available to do this job. I have the desire. I really do enjoy working with Argo. I hope my past shows I'm always prepared, never missed a board meeting, and I hope you take it upon yourselves to reconsider me for a further term. Thank you.
I now move the motion that Christopher Edgar Cuff be re-elected as a director of the company. Can I ask that shareholders who wish to ask a question regarding this resolution make their way to a microphone? For your information, details of the proxy votes received on this resolution appear on the screen. a simple majority of greater than 50% in favour is required to pass this resolution. Are there any questions regarding Chris's re-election? Yes, please.
Greg O'Connell, representing the Australian Shareholders Association. Mr. Chris Cuff's public profile makes assessment of the skills that he brings to the board readily achievable. Mr. Cuff's apparent workload, though, appears high, with multiple directorships and 2 chair positions. Could you comment, please, on the ability of Mr. Chris Cuff to devote adequate time to the Argo board?
Thanks very much, Mr. O'Connell. As I said to you in our meeting prior to the AGM, Chris is a very valuable member of this board and certainly provides plenty of time for Argo. I might just take the opportunity to note that Chris has been acknowledged officially as a legend of funds management by his peers in the industry, and we're lucky to have him. Chris has attended all meetings, as he said. He provides plenty of input to Argo both during meetings and between. And yes, I noted that Chris has a number of appointments, but they're not like normal company directorships, and so your formula approach to assessing that doesn't work. Yes.
The comment I want to make is that one of the strengths of Argo is that the directors and the managing director, basically officials, are long-standing. They don't change every 5 minutes. I think that's one of the... So there's a lot of continuity, and unless directors don't get on with one director doesn't get on with the other directors, or they basically stuff up, I think it's a good policy to stick with them. And as the others directors support Mr. Clough, I'm wholeheartedly support him as well. Thank you.
Thank you very much. Any other questions or comments? I now put the resolution to the meeting. Please mark your green cards for item number 3. Thank you. I'll move to the next item on the agenda. Ms Leanne Buck was appointed to the board in July this year as an independent non-executive director, following an external search process which identified that her extensive executive and company director experience provides a skill set that is ideally suited to the board. In accordance with the company's constitution and being eligible, Leanne offers herself for election by shareholders today. Details of Leanne's qualifications and experience are included in the notice of meeting. The other directors unanimously recommend that shareholders vote in favour of Leanne's election, as they consider she is well qualified to be a director of the company. I now invite Leanne to address the meeting.
My fellow shareholders, further to my earlier introduction, my name is Leanne Buck and I'm honoured to be seeking your support for election as a director of Argo. I'm an experienced company director and I'm eager to bring my over 20 years of global investment management and funds management experience to the Argo board. I was previously the head of direct investments for New South Wales Treasury Corporation, where I was also the member of the investment committee, where we were responsible for over $100 billion of investment on behalf of New South Wales government entities. I was also a senior leader with Macquarie Group, Westpac, Hastings Funds Management, and I started my career in Montreal, Canada with KPMG. I'm currently a non-executive director of AusNet Services and Industry Super Property Funds Management. And I've recently been appointed as a director of a not-for-profit organisation called St. George Community Housing, which is the largest community housing provider in New South Wales. And I am currently being appointed as the chair of the Audit and Risk Committee for St. George. I was previously a non-executive director of Spark Infrastructure and of Australia Pacific Airports Corporation, which is the owner of Melbourne and Launceston airports. Through my experience, I've developed perspectives which I believe will be valuable to Argo as it seeks to continue its established track record of maximizing long-term shareholder returns through income and capital growth. I commit to bringing to the Argo board my expertise in setting strategic priorities, oversight of funds management businesses, financial management, portfolio construction, driving long-term returns, supporting the performance of successful management teams, and driving sustainability in long-term investments. I look forward to applying my extensive expertise in investment markets and funds management in order to make a meaningful impact on the Argo board, and I appreciate your time and consideration of me working for you as a director of Argo. Thank you.
Well, thank you very much, Leanne. And now's the opportunity for any shareholders to ask questions regarding this resolution. And I now move the motion that Leanne Margaret Buck be elected as a director of the company. For your information, details of the proxy votes received on this resolution appear on the screen. A simple majority of greater than 50% in favour is required to pass this resolution. Are there any questions regarding Leanne's election? If not, I now put the resolution to the meeting. If applicable, please mark your green voting cards for item number 4. Thank you. That concludes the formal business of the meeting. The poll will remain open for a short time after the meeting to allow you to submit your votes as you leave. We will announce the results of the poll to the ASX later today. If there is anybody who requires assistance with filling in the voting papers, please ask one of the representatives of Argo or Boardroom. I'd like to take this opportunity to remind you that the 7th Annual General Meeting of Argo Global Listed Infrastructure Limited, which is also managed by Argo personnel, will be held in this room at 12:30 today. Argo shareholders and other visitors are invited to attend. You'll need to register separately for that meeting if you've not already done so, and you can do that at one of the booths outside in the foyer. During the break between meetings, the directors, senior executives and other staff of both companies will be available to take any other questions that you might have. And just to let you know, I will be wearing a mask while greeting and talking to shareholders and guests. You should feel free to wear one also if you wish, and if you choose not to wear one, that's fine also. Please do not forget to place your voting paper in one of the ballot boxes as you leave the room. I now declare the 76th Annual General Meeting closed, and I invite you to join us for refreshments in the foyer. Thank you very much for your attendance.